Hi everyone, welcome to another video of Helping Hands. If you are a salaried employee, what do you think of the income which is considered for income tax calculation? Is it just the gross salary mentioned in your salary slip multiplied for 12 months, or are there any other extra components which is not mentioned in the salary slip? If you look at your salary slip, it contains a lot of components. Some are tax-free salary components while others are partially or fully taxable. And there are components which are taxable but may not be mentioned in the salary slip. Keeping this in mind, it's very important to maximize the tax-free and partially tax-free components in the salary. Here is a list of 12 components in your salary that is tax-free. In case you have it in your payslip, great. But in case you don't have it, you can always discuss with your company or your HR.
Now let's go into the video.
First, let's see what are the components of salary. The salary includes pay, leave salary and advance of pay, bonus, dearness allowance, compensatory allowance, HRA with provision for exemption, which we'll be soon discussing in this video, value of rent-free quarters, fees retainable by the employee, honorarium and children education allowance, pension, but family pension is not included under salary, subsistence allowance, interim relief if any, overtime allowance, leave encashment on LTC, and government's or any other employer's contribution to the NPS scheme. Here, I would like to emphasize more on the point number 15. Even though the government's or any other employer's contribution to the new pension scheme is not included in the salary slip, usually this amount is also taken into consideration for taxation, which means that employees and employers' contribution to the NPS comes under taxable income. These are some of the major components of salary. Now, let's see what the salary does not include. As discussed earlier, I am categorizing these non-components into three categories. The first one is fully tax-free components. Among these, the first one will be the children education allowance, not exceeding rupees 100, and hostel expenditure not exceeding rupees 300 per month per child up to a maximum of 2 children. The second one is the uniform allowance or the dress allowance. An amount up to rupees 24,000 per annum is tax free, but this cannot be given for normal clothes. This is more common in manufacturing units where they have dress codes. Now comes the third one. This is the meal coupons. Meal coupons like Sodexo or tickets are tax free subject to rupees 50 per meal, assuming 22 days working per month and 2 meals a day. Meal coupon of up to rupees 2200 per month are tax free, which means annually this amount comes to 26,400 rupees per year. Now let's come into the second category, that is components which are tax free only on the submission of bills. The first one is tour or transfer allowance. This includes airfare, rail fare, and other transportation costs. Also, the daily allowance given to the employee during these purposes. The next one is the gift vouchers. Gift vouchers up to rupees 5,000 per year is exempted from tax. It's good idea for the companies to gift these on employees' birthdays or on various other occasions. Now comes the sixth one. Newspaper or the journal allowance. Amount up to rupees 12,000 per annum is tax free against submission of bills. Coming to the seventh point, it's mobile phone and internet bill reimbursement. We all use mobile phones and internet, and many a time for office work too. The reimbursement of mobile phone and internet bills used for company purpose is tax free. There is no limit on the amount of reimbursement and is fixed by each company depending on work profile. On a conservative estimate, you can easily claim 500 rupees for mobile and 1500 rupees for internet expense tax free every month. The next point is leave travel allowance. Leave travel allowance is tax free only when you get your traveling expenses reimbursed from the company on submission of the bills. You can claim LTA twice for two domestic trip with family or dependents in a block of 4 years. Now, the next point is HRA, which is a very important point to be discussed. HRA is present by default for most salaried employees. However, the percentage of HRA as part of basic salary is sometimes not optimal. For most optimal HRA, your HRA should be 50% of your basic salary and DA in case you stay in metro and at least 40% in case you live in other than metros. The HRA that can be claimed for tax exemption is minimum of the 3 points given below. The first one is actual HRA received, or second one is 40% of basic plus DA in case of non-metros and 50% in case of metros. And the third one is rent paid minus 10% of basic plus DA. If you pay rent of more than rupees 1 lakh, you need to give PAN card number of landlord to your employer. Now, for an example, let's take an assumption that let Ramu has a basic pay of rupees 50,000 per month and a DA of 50% of basic pay, which is equal to 25k per month. That is, total basic pay plus DA of Ramu is 75,000 per month. As per his employer norms, he gets an HRA of 20% of his basic pay, that is rupees 10,000 per month by default. Ramu is staying in a flat which cost him rupees 50,000 per month. Now, let's compare the first case and the third case. In first case, his actual HRA received is rupees 10,000 per month. And in the third case, as per the equation, the rent paid by him is 15,000. So, it is 15,000 minus 10% of his basic plus dearness allowance, which is equal to 10% of 75,000, which is equal to 7,500. So the rent paid by him is 15,000 minus 7,500 is equal to 7,500 per month. So if you're seeing in these two cases, in the first case, the actual HRA received by Ramu is 10,000 per month. So per annum, the HRA for him it is 1 lakh 20,000 rupees. And in the third case, per annum, it's 90,000 rupees. So, as we have already discussed, you should claim the minimum of the three cases. So, here, the minimum of the two cases here, as represented, is the third case. So, he should claim only for rupees 90,000 per annum and not for 1 lakh 20,000 per annum, as the third case is minimum in this situation. Now, let's look into the third type of category, that is salary components with perquisite tax, which means there will be a privilege. First one given is funding professional education. That is, many companies fund higher studies or professional courses or certifications for their employees. This keeps the employees updated and more productive. In case of such funding, only 10% of the course fee is considered as perk and tax is calculated only on this 10% perk value. The second point is gadgets for personal and professional use. If the company provides gadgets like laptop or tablet for professional and personal use, only 10% of the cost of gadget is considered as perk. You would be taxed only on this 10% perk value. Now, the third point is company car or car maintenance allowance. Company provided car lessens the tax burdens for employees to a good extent, and if your company provides such facility, according to my opinion, you must avail it.
Calculating income tax in India can be complex and intimidating, especially for salaried individuals. However, it's a crucial aspect of managing personal finances. The process involves determining taxable salary, applicable tax rates, and accounting for exemptions and deductions. Understanding this process empowers individuals to plan their finances efficiently and stay compliant with tax laws. As per the adage, better late than never, it's not too late to plan for your next financial year. So do plan efficiently. Hope this video might have incited you about the basic components of salary. And if you find it useful, please share this video with your beloved ones. And do comment in the comment box your opinion and queries. Hoping to see you all soon with another video. Signing off with lots of love, Maria.